So the reason I put this in there is because there's an expectation, and there's a lot of this conversation in the news right now, that we are spending ourselves into oblivion right now, right? But this is, well, take this with a grain of salt. This is the Office of Management and Budget, the White House. So they're suggesting that in 2021 we'll see the peak of our spending relative to what we take in. And then the growth will kick in, and we'll see that come back down. And it remains to be seen. Yeah, it remains to be seen. We don't know. Okay, we're going to go through a few quotes, and there's one in here that I assume someone will object to the author. So take a look at the authors. Strong fiscal outlook is an essential foundation for a growing, thriving economy. With a strong fiscal foundation, the nation will have increased access to capital, more resources for public and private investment, improved consumer and business confidence, and stronger safety net. Unfortunately, the opposite is also true. Okay, so this is one of the risks that we're seeing. We're seeing a lot of, it's kind of a steady increase, but there's a lot of corporate debt. The thing that this number doesn't show you is there's a lot of low covenant corporate debt. So there's a lot of debt that if it defaults, there's nothing that the lender can do about it. It's not tied to assets. It's not recoverable. It doesn't have the same kind of teeth in it. So if you think about when this happened kind of before, was housing lending in the 2006, 7, 8. When it gets really, really, really easy to borrow a lot of money and there's not a real way to recover it, this is that kind of an issue. It's a much smaller scale and doesn't have the same effect on us as housing lending does, but corporate lending is an issue. There's a lot of noise in this because some of the corporate borrowers are places like Apple, who've borrowed a lot of money, but they also have a lot of cash. Right? So this is not as bad as it looks because there's a lot of asset behind some of the things like these really good companies are borrowing because it's so incredibly cheap. So this was actually printed before Iran. And this is the global risk index, the macro risk index. And so right now, it's up in here, right? Trade tensions were bad. Potential Middle East issues are worse. So it's something to watch out for. This is one of those other risks that we might run into. Okay. Trade drives economic activity, especially business investment. Indeed, we have seen a decline investment in many. So this is last year. We had a fantastic consumer economy last year, and businesses didn't invest. We're going to see this. So this is the last 2 quarters, right here, and this bar right here. I think that's orange-ish, rust-colored. It doesn't exist here. See how it's just a teeny tiny line at the end? Negative. That's business investment. So notice how is it, why do you think business investment's down? We've talked about it here before. Why is business investment down?
Because they don't know what to expect.
Right. It's mayhem, and they're not going to put money in there to work if they don't know if they're not going to build a plant in Kentucky if they don't know what's going to happen next. They're not going to build a plant in China unless they know what's going to happen next, and they don't know what's going to happen next. So businesses are retrenching or holding their capital back. But what does that mean for tariff issues being resolved? What does that mean if we start playing nice with our trading partners? Not nice, but nicer. We're never going to be nice, but nicer. Right? That will relieve a lot of this. We'll see a lot more business investment. And if that's the thing that's dragging, so when you talk about people who have the 2.5% GDP expectation, they're looking at that. They're saying probably the tariff issues will be resolved, at least in part. So the idea is when GDP increases or the expectation of GDP improving is based on that possibility that the tariff war ends. And so the people that are assuming 1.5 or 1.6, it's probably based on the assumption that the tariff war doesn't end. Right? So you never know what assumptions go into someone's prediction.